Hey, good morning. Let's go over today's trade plan. So in the overnight session, we saw a breakdown across the major markets in the US with the Russell and NASDAQ leading the way on the way down. And currently the markets are heading lower on above average volume. So there is good range potential still left on the day. And there is still possibility for the markets to head lower. So heading into the open, we have initial resistance at 65.5 to 68, and we'll be using the 69 to 70 area as the bull bear zone. So as long as ES is holding below the initial resistance zone and below the bull bear zone, we know that the sell side can maintain control on the smaller time frames, and from there we can head lower for a test of 52 to 54 and possibly even 47 to 49 and 40 to 42, which is really the major swing low in play right now. So as long as we are not seeing any major upside momentum off the open and the other markets are continuing to be fairly weak, the focus is going to remain on the short side, below initial resistance and below the bull bear zone, and we will be targeting a move at least down into 52 to 54 with a good possibility of the market heading even lower. But in order for the market to continue lower, we should be seeing trend down internals. Now, given that the previous close was 2081, the AD is going to open on a weak note anyway. It should be opening on a negative extreme, and the main thing will be to make sure that it actually holds at that negative extreme and continues to get weaker. So the AD line is not going to be extremely helpful off the open unless you start seeing a major reversal in the advanced decline. But again, I don't think that's going to be very useful because it'll probably be coinciding with a bounce in the actual price. So as long as we're not seeing any odd disconnect in the AD, we should be looking for a move lower. And again, the minimum target is going to be 52 to 54. Right now, the market's getting a little bit of responsive buying off the 57.5 high volume node, as well as because the market is quite exhausted into it. But after balancing over here, there's still potential to go down and test 52 to 54. And given that the Russell is breaking the recent swing low and NASDAQ is still holding an area where there's some more downside potential, S&P can certainly head lower as well. And we could be testing some of those lower zones. So as far as the buying opportunities go in this market, you do want to be cautious on the long side because even though we might get some short-term rotations and some bounces off of the support zones along the way, if the market is really selling off on high momentum, then we're not going to know where that turn is going to be. So if it's liquidating and going down on heavy momentum, then it's really only going to be worthwhile to attempt a long trade if the market is exhausted into a major zone like the 40 to 42 or the 28 to 30 half. Now 28 to 30 half seems really far away at the moment, but that's really a strong area of support. So in the event that ES actually heads down there, that would be a pretty good buy on first test because the markets would be very exhausted by the time we actually got down there. And at the same time, again, it is a fairly strong area of support. So right now, on the larger time frames, we can see that the market is still technically within a balance, but the sell side is dominant within that balance. And that's why our focus is going to remain on the short side, below previous day's low, below the bull bear zone and the initial resistance zone. So as long as we're holding below 69 to 70, the focus will be on selling pops, looking for a move down into at least 52 to 54. And then at that point, we'll have to assess just the quality of the buying that comes into the market, if any. And, if we're just going down on heavy momentum and the tick is completely below zero and printing some nice downside values, then 52, 54 might not get much of a reaction at all, and we could go down to 47, 49, and then the larger time frame target on the downside would be 40 to 42. At that point, the market would be quite exhausted, so we could get some buying off that zone anyway. It also marks the recent major swing low, and if Nasdaq's also hitting a major support area and Russell's also hitting a major support area at the same time, then we could be getting some responsive buying off that zone. But for now, heading into the open, unless we're seeing some very clear-cut signs of upside momentum, the focus is going to be on the short side. On the upside, if we break above 69 to 70 and above initial resistance, that would be an indication that buyers are showing up, and we could be looking at more of a balanced session. So from that point on, if we do get some buyers, and in the event that we break out above 69 to 70, then the market can go up and test 74 half, 76 to 78 half, and possibly even go up to the gap fill in 82 to 84, at which point responsive sellers can be active at the resistance zones along the way. But 69 to 70 would have to be taken out for the buy side to start regaining control on the current time frame, on the smaller time frames. As long as we're holding below 69 to 70, the short-term bias is going to be bearish, and we'll be looking for moves lower. So that's really the main idea heading into the open. The focus is going to be more on the short side, unless we see very clear-cut signs that buyers are showing up in a big way. So those are our main thoughts. Let's see if we can hop on board for a short trade, targeting at least 52 to 54, and we'll take it from there.